There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for a free trading education event. Call now. Good afternoon, everybody. This is Mark. We're back here for the daily recap. This market, two things are happening. Obviously, we had a slew of earnings last night, a little bit mixed results. IBM down around 9% for the day, missed earnings, but then you had Google, CMG, Microsoft out of the big boys that really, caught fire. Microsoft up okay for the day, still really couldn't close, is not closing above 30, but Google recaptured some key moving averages, has some resistance at this point in time, right at these levels, but overall it regained a lot of composure. It's probably going to look much better over the next few days. I like how it held in there. We had CMG, which broke out of its range, and I know that's not heavily shorted, but it's definitely shorted by different cast of characters. And then you had IBM, as I was saying, to the downside. If we didn't have IBM, we'd be up a ton for the day. We are not, because obviously IBM in the picture, they're such a big part of the Dow, and that's just how things work. Two things happened. On the spiders, we recaptured our 50-day moving averages. Quite frankly, yesterday we went below, but we didn't close below there. So maybe we try to hang above the 50-day for a little bit of time. I still think that some damage has been done. I would not be surprised to see us lower next week at some point in time based on the charts and based on what I'm seeing. But another day or two of up action will probably be good for some shorts to really put some new positions on. I still am lacking leadership. That scares me a little bit overall on the tape. But at the same time, we're getting up 100, down 100 every single day. Lots of two-way action that is good for traders as long as you're not marrying your positions from the long or the short side. So that's what my take on the spiders. Qs couldn't regain, I think as of today, you're going to get some resistance at the 50-day, which is much of the case. And I think it needs more time. We have a big amount of earnings coming out next week, some bellwethers, obviously, that are going to move this market. Apple's Tuesday, Netflix from an individual trading point of view on Monday. I believe Amazon's coming out, and I'm assuming some other big boys are on the docket. So that's really going to dictate, certainly from a trading perspective, some things to look at, and ideally also from a market perspective, we're going to get a little better picture on where this market's headed over the next few weeks. Right now, personally, for the last 3 months, I've been having a portfolio of positions, anywhere from 5 to 30 positions. I have basically taken off the majority of my positions, figuring I'm not really worried that I'm going to miss the next rally. I can easily get back involved. I just think with these 100-point gyrations up one day, down the next, it's sort of given us a little bit of a clue that either this action could continue for the next few weeks, and from that point of view, trading, trading is really the best way to really make cash flow, or quite frankly, we're heading to the downside after wild gyrations. I'm not sure which one is the case. More time will tell. Understanding we did just fall around 3.5%, 4%. Everybody said in that pullback it becomes viable, but right now you have technicals that are starting to break down, and the technicals are telling you right now that it doesn't pay to necessarily be long, and you're not necessarily going to miss huge opportunities. Understanding there's trading stuff happening all day long. Leadership, we're still lacking. The banks obviously have fallen by the wayside a lot. You had Goldman Sachs, JP Morgan, Citigroup, which seems like the last Mohicans hanging above some key moving averages. But again, I don't think Citi alone really can hold us up to where we need to be. I'm not totally bearish, certainly. I'm really just being flexible in my thinking and understanding that, quite frankly, when you lack leadership, you got to really put things and take a step back. I think there's been very good two-way action across the board. So today, we had a lot of individual plays. You had Google on the, as an individual play. You had VRTX, which last night had some FDA, good news on the FDA front, which was tradable. Didn't do a whole lot. Most of the action happened overnight and already gapped up a chunk. more, we have to wait to see how this plays out over the next few days. Gold gapped up again, keeps gapping up to this level. That it's either going to get into that gap or it's going to come back to the downside. We'll have to wait and see. I don't know if enough information is there yet. I've been short a little bit, but 3-4 days, it's forming a rising channel that normally works itself to the downside. At some point, we'll have to wait and see if that's the case with that. IBM, I talked about, obviously got hit. Home builders trying to recover a little bit, but really they're at this point basing on the bottom third of the trading range over the last few months, which could be a little bit of a bear flag. The biotechs are really at this point the strongest sector, the only sector in my opinion that's hanging in there with any sort of good chart pattern, top third of a trading range. You can just go down the list. CELG recovered nicely after a few days down. AMGN hanging in there also. After a few days down, this is REGN hanging in there also. GILD broke out today. So you definitely have a slew of the biotechs that need to be on the radar. But besides that, I think you can take a little bit more of a hands-off approach and let the market come to you. And from a day-to-day point of view, based on what I saw this week, I think we're due for that over the next 2 or 3 weeks. And then I think you'll get a lot clearer picture on where this market's headed, at least over the summer. And that's the reality. No need to be stubborn. Understanding that we were up 10-12% for the year. We've pulled back. We're still up a good percentage for the year. A little digestion is healthy. This digestion doesn't necessarily mean a V bottom is going to be formed. It could be much more of a U, which means it's going to take time, not necessarily that quick snapback, and we're up 25-30% for the year. Most likely that's not going to be the case. It hasn't been for a number of years, but we'll have to wait and see and let the technicals and the patterns that dictate determine that. Don't need to determine it yourselves. From a trading point of view, for those that were involved this week, if you were pretty much flat every morning, there was really good opportunities. That's my suggestion overall. This is where I'm at now. Saying it, I think early in this week, I wanted to try to get a little bit flatter. I'm there at this point in time, and this is the first time I've been in this position, meaning pretty flat, very flexible, first time all year, and I think it's prudent to be in that situation. So hopefully you took advantage of some of the plays the last few days. Certainly today there were some decent ones also, and we'll see you back on Monday and enjoy the weekend.